Most people don't realize they could owe thousands of dollars back at tax time just for misfiling some important health insurance forms. If you received an advanced premium tax credit with your health insurance plan by enrolling through the marketplace, you are required to reconcile what your estimate was versus what your income ended up being. And this is done through Form 8962. So missing this step could cause you to owe back money on your tax return. You could also be prevented from getting credits back that you would have otherwise qualified for, and it could potentially put your current subsidy in jeopardy going forward, because when you re-enroll at the end of this year, they want to see that that form was filed with your taxes. So let's get into the flow of information that comes from the marketplace via Form 1095A to you or the tax preparer. That's Form 8962, and then back to the IRS. Okay, so basically, this is a health coverage tax tool on healthcare.gov, so you can get the premium amounts that would go on this Form 8962. So we're going to pick a tax year. We'll start with 2025. And I'm just going to pick Texas. And we're going to do 2 people. Yes, we're going to say yes. And this doesn't necessarily matter. You can just put in generic data here. Okay, spouse. Okay, so somebody that would be, let's say 45, 1981. Zip code, I'm going to put in a Texas zip, excuse me, XR County. Now this just says, what months, obviously, somebody had coverage for, what months they received the advanced premium tax credit, same thing, and what months you were obviously enrolled in coverage. Okay, I'm just going to put the same for the spouse here. 1981. Okay. So, assuming this person had subsidy for the whole year and a plan on the marketplace for the whole year, you can see the monthly SLCSP, that stands for single lowest cost silver plan. The tax credit that you get, or the advanced premium tax credit you get, is based off of a percentage of the second lowest cost silver plan. So this data here, it actually would come on your 1095 that you get from the marketplace as well, but you'd take this data. This is a sample Form 8962. You can see that goes here in column B. So this is just an example, so it might be slightly off, but you'd take that number, you'd put it in here, right? And then this example here, this is the premium of the plan, right? So that you got, not necessarily what you're paying, but the actual premium. The actual 8962 form looks just like this. This is, again, just an example that you can be found on IRS.gov. So this is what the premium was. Monthly contribution. This is actually what you, what your contribution is based off the premium in the single lowest cost silver plan. That basically, this is the max credit you could get, right? And then this would be the APTC that was paid on your behalf, right? So, and then your premium would actually be the difference of that APTC paid and the enrollment premium, right? So that would be $230, right? So, credit allowed, this is what would happen. Let's say somebody filed, they used a projection, right? That was around, let's say 48,000 or 52,000, let's say, and then their income ended up being 50,000. So credit allowed, basically that's what you technically would have qualified for if you used the estimate that was the same as what your income ended up being. I know that's a mouthful, but so in this situation, if that were the case, like let's say somebody projected their income to be 52,000, it ended up being 50,000, you're due back an additional credit on your tax return. So what would happen is they would add that to a tax refund or deduct it from the taxes that would be due in this example. Okay. Because you can see total premium tax credit allowed was 10,396, which is this number, right? Times 12. This is what you actually received, which is column E, times 12, and that's what you're due back. Now, if these were reversed, obviously, then you would owe back. So if you owe back, they're going to add it to a tax bill that is due, or again, reduce the refund that you would have otherwise gotten. But the important thing to note is, I'm not an accountant, obviously. It's best to use an accountant. They should be familiar with this process. If you're going to do it by yourself, you do need that 1095 form that comes from the marketplace, usually in like mid-February, right? And you would take that data, use that to fill in this form 8962. So this is going to be different depending where you are in the country, the family size. There are certain exceptions to some of this, right? Like if you, for the 2025 tax year, if you were married and you filed separately, but your income didn't exceed a certain amount, there's a threshold. You only have to pay back a certain amount based on what percentage of the federal poverty level you were actually in. Now that's going away in 2026, but there are exceptions is my point, right? And then if you got married in the middle of the year, that's another one. Like, you wouldn't necessarily, you got married in the middle of the year, your income goes up more than what you thought because you weren't aware of your spouse's income or whatever the situation is. That is prorated too. So there are some exceptions to that. But again, you can go through here how this was determined, right? They go off of your line 11 on the 1040, which is basically your AGI. The M is modified adjusted gross income. So the modified is they add back in certain forms of tax exempt income. This could be like Social Security income, foreign earned income. That gets added to your AGI to formulate the modified adjusted gross income. Okay, and this FPL, that stands for federal poverty level. So you qualify for a subsidy up to, going forward here in 2026, up to 400% of the federal poverty level. In 2025. That was different because there was a big change, obviously, here this year in 2026, where they took away the enhanced premium tax credits, which was part of the Inflation Reduction Act that kept getting extended through COVID. That Inflation Reduction Act with the enhanced tax credits, that was meant to be temporary. So it basically expired at the end of December 2025. But again, this reflects, okay, what percentage of FPL you were, right? And then also determines what level of cost reduction or CSR that you qualified for if you enrolled in a silver plan. So if you enrolled in a silver plan, the silver plan, based on what percentage of the FPL you were at, they lower the copays, they lower the deductibles and the out-of-pocket max. A lot of times those silver plans, when you have a cost share reduction, end up being better coverage than gold plans in that example as well, right? And this kind of takes you through these figures, right? So they'll say, okay, your income was 245% of the FPL, your annual contribution amount based on that basically what that's saying is, okay, that's about what like your average plan should cost, right? And they're basing that off of the second lowest cost silver plan, right? You can see that here. Okay. And this gives you all those, the figures and the calculations that go into it. I mean, we don't have to get too deep in the weeds, but basically that's where they're getting all these numbers and what they mean, right? And you get them from your 1095A. Again, you can use this health coverage tax tool. It's pretty intuitive. You just enter in the information if you needed something to put into this column B. But again, you get that off the 1095A, and then you calculate these as well. But that's kind of what that means, right? That's what that column means. So again, 2026, there are some big differences. If you're getting a subsidy up to 400% of the FPL, again, it's less of a subsidy than you would have gotten, but there's other factors that go into that. The second lowest cost silver plan in the area. But like when you're filing in 2027 for 2026, this 400% number is going to be very important because if you end up being slightly over that, then you could have to pay back all the subsidy. But before, with the enhanced premium tax credits, if you were slightly over that, you just pay back, the percentage of the subsidy, the difference between what you projected and what it ended up being. There's not this cliff, right? So now there is this cliff again going forward, which most people won't see that until you file in 2027 for the 2026 tax year. Okay, so this is just a quick breakdown of how the information flows from the marketplace via Form 1095-A to you or to your tax preparer, who then would fill out Form 8962. And again, that would be filed with your tax return. All the reconciliation is done along with the tax return with the IRS. So we have some more videos here to explain how these premium tax credits and subsidies all work. You can check them out as well.